Hi, this is Vinod here. In this video, we'll look at the technical analysis of the Snowflake stock. It has been in news recently, and there are a lot of noise around this particular stock. And in this video, we will look at the technical analysis and the mistakes that some of the traders are making. So this is what will be covered in today's video. So we'll be doing a technical analysis using the chart, and we'll also look at what is the news around Snowflake. And the third point is we'll look at some of the mistakes that traders are making. We'll also dive into why the reasons behind these mistakes. And in fifth, we will cover an important lesson. So stay in this video. Let's now first look at the Snowflake chart. As you can see here, the stock has broken down from a major support level, primarily because on 23rd Snowflake didn't meet the market expectations, so there was a huge drop on 23rd. It was mainly around the news, but as you can see from the technical analysis, the chart is very weak. The price action is showing that investors are trying to get out, and the momentum is strongly in the downward direction. There is a huge selling pressure, and people are trying to get out, and that's the reason why you can see that the price has been falling day after day, and it's trying to consolidate in this region. So this is a very weak chart. The price is below its 200-day moving average and also below its 9 and 21-day moving average. So from a technical analysis perspective, the price action is very weak, and it has a strong momentum in the downward direction. So that is the technical analysis. So it has broken down a major support, and selling pressure is very high. So we have covered the technical analysis of the chart. Now let's look at the news. Why has there been this we have covered. So what is the news around Snowflake? So the main reason behind the selling pressure is that on 22nd or 23rd there was the quarterly results announcement, and it missed the profit estimates that the market was expecting, and they have also lowered the operating margin guidance for the following year. As we all know, the market is always forward looking, and it's a discounting machine. It always looks forward like. And there was also some bad news around the security incident, where some of the Snowflake's customers data was kind of being accessed without because they didn't have any two-factor authentication or something. It might be mostly due to the client's mistake, but still it is something bad around Snowflake. So because of all these reasons, there has been huge selling pressure in the Snowflake stock. Now when I look at Twitter and some of the news feeds that I've been looking at, there is a lot of mistakes that traders are making. Some of them are like, people are just getting married to the stock. They fall in love with and they are trying to average down. So they truly believe in this company, even though the market is telling them, even though there is a huge selling pressure, investors are trying to get out. They just fall in love with the whole story around AI and cloud. I do agree that Snowflake is a very good product, but at this time the market is not recognizing it. It's not rewarding it. Because there are other opportunities which are getting all the attention. And another big mistake that I see investors making is adding to their losing position. So this is a huge mistake. Suppose if you are taking like a vehicle, like a public transport, and if you realize that it's going in the wrong direction, you will not just stay on the bus and then hope that it will turn around. You will immediately get out at the next stop and try to take the bus that goes in the right direction. But when it comes to money, people think our brain behaves in weird ways. So adding to a losing position, there has been plenty of academic research which has shown that adding to a losing position or adding to losers is not a very rational decision to be making. So these are some of the mistakes that I've seen traders making. Now let's look at the reasons behind why people or traders make these mistakes. What the primary driver of this reason is they try to do everything to avoid or reduce the pain of feeling this loss. So they add to the number one reason they are making this decision from an emotional or an instinct perspective. The number one reason is that they want to avoid this pain of seeing this loss in their portfolio, and they fall in love with this story because, and then they try to tell themselves that it is a good investment, it will turn around, and they have a lot of hope in investing is always a bad word. You can have, like, you never have hope in investing perspective, like or in a trading. This is something that a lot of professional traders as well say, never hope for a trade or an investment to turn around, and in most cases it will never happen. Yeah. And yeah, averaging down, yeah, the reason behind averaging down is that people think that if they average down and if the stock rises up, they can sell it for a break even, and it leads us to the number one point, which is all these decisions are being driven because they don't want to see red in their portfolio, they don't want to see a loss in their portfolio. Now let's go to the important lesson that I promised in the first slide. The important thing in trading is that small losses are okay. This is the risk that we are taking in order for us to make more bucks or being profitable in the longer run. There is, like, problem occurs when this small loss when we are not okay to accept a small loss, it turns into a big loss. When we don't limit our small loss and we are hoping for a turnaround, we are actually giving it time for it to maximize the loss. Like in most cases, if you have seen, you can analyze your own past trades. I have done this on my past trades. Every time I have lowered my stop loss, or every time I have not followed my rules, it has always turned out to be a bigger loss in future. Now, the important thing to understand is that we don't have to be right 100% of the time. In stock markets, accuracy does not matter. What really matters is how much we make on the winners. Like, we need to ride the winners and we have to have small losses. The key to being profitable is having small losses. And the important thing is we have to be in a mindset where we are okay to accept these small losses. So that is the important thing that I wanted to share in today's video, and these are common things that we can apply for each and every trading decision. Like whenever we are trading, making a decision, whether it is adding to a losing trade or like anything, we need to think whether we are taking this decision from an emotional perspective or is it a rational decision. Adding to a losing trade is not a rational decision. Lowering your stop loss is not a rational decision, because once you lower, you're allowing it to become a small loss to turn into a bigger loss. So whenever you make any decisions in trading or investing, think whether these decisions are being driven from an emotional perspective or whether these are rational decisions. So yeah, if you found some value in this video, do subscribe to this channel.